what actually happens inside of a business. This is day four. Let us waste no time here. So, as you all know, I always recap and essentially speak to what we have built thus far. So, we have established the fact that all companies are transformation systems. Businesses take resources, economic resources, which are the inputs into the system, and via their productive processes, they transform them. They transform these resources into valued outputs, okay? These valued outputs are bought by customers, and once the output is bought by a customer, we call this value capture, okay? The company has captured some of the value that it has created. Now, we all know that in order to create value, companies have to consume value, okay? So resources are consumed within this transformation process or within the productive process, okay? Now, if we take the resources that were captured from the customer, and if we subtract the resources consumed within the productive process, we are going to arrive at what's termed the economic surplus. Okay, that's where we're currently at, and I'm going to build upon this today by speaking to what's exactly happening within this box. Okay, what's happening within this or at this transformation stage. Okay, that's what we're going to focus on today. So today we're going to focus on the transformation process. Okay, what does that mean practically? What are companies actually doing, and can we create a framework for understanding what all companies are generally doing within their productive processes? I would say we can, and as a matter of fact, I would put forth that I've done this for you today. So let's waste no time. So transformation occurs through process, okay? And to make it even more specific to you, if you don't know what a process is, I'm sure you do, but I'm going to make it as straightforward as possible. A process is simply a sequence of repeatable activities. And to take this further, you could think of a process as a system that either deterministically or probabilistically produces outcomes. Okay. So we have our inputs here. Inputs are going to be literally anything: people, information, raw materials, literally anything that could be put into this system. And via operations within this process, we're calling operations here activities, but more specifically, they're operations, meaning there are specific rules by which these inputs are going to change. This system produces an output, okay? That's the cleanest way to think of a process. It's a deterministic or probabilistic system that takes inputs and has certain operations in place to transform these inputs into outputs, okay? Next, each process is going to feed the next, okay? You could think of a company as a set of interconnected processes, okay? So process A is going to feed process B. Process B is going to feed process C, okay? The output of one process becomes the input into another, okay? That's a very clean way to think about business. Now, let's make this less abstract. And just to give you some insight into my teaching methodology, I always start really abstract, meaning I go to the most irreducible truth that I could identify, or that's possible to identify. I speak to that because that produces a very generalized understanding of the domain that we happen to be speaking to. Then I tie that abstract idea that I've presented to you to a specific example, to what's called an instantiation or an instance, to make it concrete and to make it applicable. So let's take all of this abstract knowledge that I've provided, and let's apply it to a cleaning company. Okay. So what's inside of this cleaning company's transformation box? What's actually occurring? So a customer need is identified, then a service is sold slash scheduled. And then, of course, labor and supplies have to be deployed. Okay, this has to occur in order for this cleaning company to successfully identify and then satisfy customers. This has to occur. So the full sequence is: a customer need is identified. Okay, someone needs their house or business or some kind of facility cleaned. That service is sold and then scheduled. Labor and supplies are deployed. The facility is then cleaned. Then the customer is billed. Cash is then collected, okay? Now, this brings us to a very important business principle, which is the fact that economic outcomes have operational causes. Okay, so if you've ever been in a meeting and heard someone speak to the operations of the business, they're literally talking about the fundamental processes that the business has to carry out in order to ensure the business's survival. Okay, and that's multifaceted. Companies have to collect cash on time. Companies have to bill on time. Companies have to purchase raw materials. Companies have to ensure that customers are taken care of. There are so many different things that that companies have to manage, that processes are just a clean way, or an efficient way, I should say, to ensure that the company's core needs are being met. And so when I say that economic outcomes have operational causes, let me just make this as plain as possible. So, if you want to make more money, you have two levers at your disposal. You can either capture more value from your customers or consume resources more efficiently. Okay, we covered that yesterday. If you do one of those two things while improving the other or keeping the other constant, your economic outcomes are going to improve. Okay? And if that didn't make sense, let me know and I'll be more specific. But basically, there's two levers. If one lever remains the same, or if one number remains constant, if resource consumption remains constant, but we improve the amount of value that we are able to capture from our customer, obviously our economic surplus is going to increase. And this should bring about a tremendous amount of clarity for you, because whenever you see a company doing something, or you see your company's leadership doing some kind of uh, seemingly esoteric activity, you can, generally speaking, assume that they're trying to, one, capture more resources or capture more value from their customer, or consume resources more efficiently. Okay, there's two high level categories. Everything else is a subcategory. Okay, if leadership truly knows what they're doing, they're trying to influence those two levers. Okay, so the main takeaway from this slide here is the fact that processes influence economic drivers. Okay, and to be clear on what I mean by drivers, we need to return to our slide from yesterday. Okay, so yesterday we established the fact that companies can influence the economic surplus, the amount of surplus that they take in, by either capturing more value or improving resource consumption. These are the two high level levers. Okay. Now, if we were to deconstruct value capture, we would see that it's a function of volume, meaning how many units we sell, multiplied by price, and we'll say slash mix here. Okay, when I say mix, I'm simply speaking to the variation in price in terms of the products you sell. So you might sell some products for $10, some for 100. That's what I'm speaking to. Now, as it relates to resource consumption, there's resource requirement, meaning what quantity of resources do you need to produce this economic good, multiplied by input costs. Okay, these are drivers, and companies are trying to influence these drivers all the time. Okay, if I'm selling something, I want to sell more. Okay, that's generally speaking the case. If I'm selling something, I also want to sell it for a higher price. Okay, so the price and mix has to be optimized. Okay, because that's going to influence this high level lever. Same thing goes for resource consumption, but it's the opposite. I want to use less resources within my productive process and produce either more or at least the same output. Okay. So I want my resource consumption to go down, and I want my input costs to go down. Okay. This is what all companies are doing. These are drivers, and these drivers influence this high level category. Now, back to what we were talking about here, process, okay, process performance influences those drivers, okay? And these drivers influence economic outcomes. So if we have a better sales process, that's going to essentially increase the volume of units we sell, the quantity of units we sell, okay? If we sell more units, we're going to capture more value, okay? So do you see how this process influences this driver? And then this driver in the end is going to influence our economic surplus, or this economic outcome. Same deal here. If we have an efficient service delivery process, okay? If we are efficiently delivering our services to our customer, that's going to reduce resource consumption. This is a driver. This driver is going to directly affect economic outcomes. It's going to increase, if we reduce resource consumption, that's going to increase our economic surplus, all things being equal. And lastly, if we improve our purchasing process, that could reduce input cost. And if we reduce input cost and either keep value capture the same, constant, or increase value capture, obviously that's going to be favorable for us. That's going to improve economic outcomes, okay? And so I really want you to understand this. If you're not getting what I'm saying, please let me know, and I will ensure that you get it, because this is a key pillar of economic reasoning, okay? You have to be able to map business processes to economic drivers, and of course, these economic drivers cleanly map to economic outcomes, okay? So a business is a system of interconnected processes, okay? That's the cleanest way to think about business. So resources are the inputs into the system. These inputs are going to be transformed via these interconnected processes. This, of course, produces a valued output. And then, of course, companies are going to be compensated for this valued output, and we call this value capture, okay? Now, think about the company you work for, okay? Think about your business or the company you happen to work for. What process are you a part of or ahead of? What triggers this process? What activities happen? What output does it produce? Who receives that output? And what process comes next? I'm going to pause here for the purposes of this video. I just wanted to walk you through a process at a very high level, okay? We're going to get deeper into this within this course, but I just wanted to at least introduce the topic here. If you like this kind of stuff, definitely consider subscribing, like, comment if you have questions, and stay tuned. Thank you.